Stop scrolling. Plug Power just exploded higher today, and if you're a retail investor watching PLUG, this move could matter a lot more than you think. We're talking about a stock that's been crushed, doubted, heavily shorted, and left for dead by many on Wall Street. And suddenly, boom, it spikes. So what just happened? Let's break it down fast and simple. Plug Power, ticker PLU, reported its latest quarterly results, and the market was expecting more bad news, more losses, more disappointment, maybe even more dilution fears. Instead, investors got something they haven't seen in a long time: progress. The biggest shock? Plug reported a positive gross margin in the fourth quarter. Now, that number was just 2.4%. That doesn't sound huge, but here's the crazy part. Last year, their gross margin was deeply negative. They were losing massive amounts just to generate revenue. So going from deeply negative margins to finally positive territory, this surprised Wall Street because it signals that the bleeding might actually be slowing. And when you're dealing with a turnaround stock, that first sign of stabilization is everything. Now let's talk earnings. Analysts expected Plug to lose around 11 cents per share. They lost about 6 cents instead. Still a loss, yes, but a much smaller loss than expected. In this market, beating expectations, even if you're still losing money, can trigger serious upside, especially in a stock that's been heavily shorted. And PLU has been a favorite target for short sellers. So when the numbers came in less bad than feared, short sellers likely had to rethink their positions. That buying pressure can accelerate fast. Now pay attention to this. Revenue also came in stronger than expected. Plug generated roughly $225 million in fourth quarter revenue, up double digits year over year. So this wasn't just cost-cutting magic. They're still growing. And when you combine improving margins with revenue growth, the market starts to see a possible path forward. But that's not all. Plug officially appointed a new CEO, Jose Luis Crespo, and the company is pushing one phrase: hard, disciplined growth. That's a major shift in tone. For years, Plug focused on expansion, scaling, big hydrogen dreams. But that came with huge cash burn and operational issues. Disciplined growth means focusing on profitability, tightening spending, improving execution. Wall Street loves that narrative, especially for companies that have struggled. Management also reaffirmed a clear roadmap. They're targeting positive EBITDA by the fourth quarter of 2026 and full profitability by 2028. That's not tomorrow, but it gives investors something they didn't have before: a timeline. Markets don't price the present, they price the future. And if investors believe Plug can actually survive and execute until then, valuation assumptions start to change. Here's what could happen next. If Plug continues improving margins quarter after quarter, this could mark the early stages of a real turnaround. Momentum traders could pile in, shorts could continue covering, retail FOMO could build. But if next quarter shows margin slippage or rising cash burn again, this rally could fade just as fast. Because let's be clear, the company still posted a large full-year loss, and there's still an ongoing securities fraud class action lawsuit tied to past disclosures. Those risks haven't disappeared. This is still a high-risk, high-volatility stock. But today's move tells us something important. The market was positioned for disaster. It got improvement instead. And when expectations are low, improvement can feel explosive. This isn't about Plug being perfect. It's about Plug not looking hopeless. And that's a massive psychological shift. For long-term believers in hydrogen, this report strengthens the idea that the company might stabilize and eventually scale profitably. For short-term traders, this is about momentum, volume, and technical follow-through. So you need to decide your angle. Are you buying into a multi-year hydrogen turnaround, or are you trading a short squeeze pop? Because those are two very different strategies. One more thing, Plug also highlighted an $8 billion global sales pipeline. That's not guaranteed revenue, it's potential deals in discussion. But it reinforces the idea that demand for hydrogen solutions is real. If even a fraction of that pipeline converts into signed contracts, revenue growth could accelerate. And if margins keep improving while revenue grows, that's when real re-rating happens. So here's the big question. Is this the beginning of Plug Power's comeback story? Or just another temporary spike in a volatile clean energy stock? Drop your answer in the comments. Are you bullish on PLU after this earnings surprise, or are you staying on the sidelines? And if you want more fast, no-fluff breakdowns of major stock movers, make sure you subscribe, because when these moves happen, you'll want to understand them before the crowd does.